everyone. Happy Wednesday. Alright. Hope you guys are doing good today. If you're watching live or if you're watching the replay, just say hi. Let us know where you're from. If you're taking any trips this holiday season, let us know in the comments. Share what we're going to be doing. I know I'm going to be going up to my hometown of Okeechobee for Christmas, and then we'll be back here the next week and then New Year's. So just kind of staying local and hang out with family. That's what the holidays are all about, is family time. So I just want to jump on here for a couple minutes, and we're going to talk savings this week. Last week we talked about ways to pay down your debt and have a plan to work on our highest interest rate loans first. And today we're going to kind of feed into that. Paying off your debt and savings all kind of go hand in hand. So before we get started, if you don't know who I am, my name is Jayce Anania. I am owner and accountant of Hooked Accounting Services, and I provide bookkeeping services for small business owners and medium business owners who just need help keeping up with their books on a monthly basis, understanding their financials, and increasing profits, because that's what it's all about. So I just want to go ahead and dive right in and talk about savings. So there's going to be 3 steps to this process. First step is we're going to need to calculate a few things. Let's calculate our expenses so that we know what we're dishing out on a regular basis. We also need to determine what our pre-tax income is. That way we know what we can work with. If you don't know how to determine your pre-tax income, that's where your accountant or bookkeeper is going to come in handy. They can tell you what your figures are. They can also work with your tax professional if they are not one themselves, and really help you figure out your tax liability. So once we know what our expenses are and our pre-tax income, we're going to set up your payoff and savings goals. Find out what you need to pay off, which ones you need to pay off first, kind of maybe figure out a timeline of how long it'll take you to pay off your debt, and also what our savings goals are. And of course, we're going to keep track of our expenses. The more we track our expenses, the more we understand where money is coming out, why it's coming out, and maybe how we can save some of that money and cut some expenses. So just being mindful of your expenses is a huge helping when you're trying to grow your profits and make sure your business is successful. So you cannot move on until you have completed these couple things. Without knowing this information, you're not going to be able to plan to pay off debt or to save. Step 2 is we're going to use the 50-20-30 rule. What does that mean, Jayce? I'm going to tell you. 50-20-30 rule is a common rule many business owners use, many individuals use, because again, just like we've talked before, a lot of this you can use in your personal life too. So maybe you're doing good with your business, you don't have a lot of debt there, you have extra income coming in, maybe you need help on the personal side. This will help there too. So 50-20-30 rule. 50% of your income needs to go to your essential needs. Your fixed expenses, which we've talked about before, the things you just can't get away without. Your cost of goods sold, your minimum you have to pay, to make a quality product or service for your customers. 30 is the wants. So your wants are things that, I think this is backwards. I believe 30 is the savings and debt. Sorry, my notes are backwards. So the 30% is the savings and the debt repayment. Being able to put money away to pay off debt so we don't have to worry about it anymore. And then 20% for for wants. So 20% is just your extra. Things that maybe going out to dinner, going on a trip, doing some extra so that you can provide a little bit more to your clients, especially around the holidays if you want to do something extra, a holiday party for your employees, things like that. So these are your 20%. So 50 essentials and needs, 30 for debt and savings, and 20 for wants. So essential things, just to break that down, are your rents, your houses, business costs, groceries, gas, Unfortunately, gas fluctuates all the time, so that's one of our variable costs. Savings and debts, we know those are your loans, your retirement contributions, credit card payments, savings accounts, things of that nature. And then your wants are your, fancy clothes or meals out, monthly streaming services, gym memberships, team building exercises more frequently, things like that. Those are the extras that we can do. Living by this or operating by this rule isn't always easy, right? We have to be mindful of where our funds are going and which category they're fitting into, and making sure we're kind of matching that rule. But this is not one size fits all. Everybody's needs and essentials and their debt, it's all going to vary depending on your situation. So you really have to make it fit your current situation or your future situation, whatever you want to work towards. And there's many factors that change this too. So somebody could have a pretty identical situation to me and they can live in a rural community. I know when I lived in Okeechobee, it was a lesser cost of living, so I didn't have, the high rent payments that I had there, or the high insurance payments. Living here in South Florida, all those expenses, of course, are greater. If you live in New York, your expenses are even greater than what I have here. So it all depends on where you live, the size of your business, the size of your family. If you have more kids, of course, you're going to have more expenses. So that all varies. Just checking on my little one. She got in trouble last week when I was doing my live. She tried to dig out of the yard. So that was fun. If you run your own business, income too may be a little more irregular for some people. If you have a seasonal business especially, you'll have times where you have a high amount of income, and then you'll have times where it's a little slower. So this might be a little harder for you to use. There are other forecasting models that you can use other than the 50-30-20 rule. Last week, like I said, we talked about prioritizing debt. Keep that in mind. Devote that portion that we talked about that you need to use to do that snowball effect to pay off your debt. Keep that amount in mind so that way you can plan this accordingly. Try not to get off track here. If you have any questions while I'm doing this too, feel free to put them in the comments, and I'd be happy to address them while I'm here live. You can also grow an emergency fund. There's always in life unexpected things that happen. So an emergency fund is kind of an essential thing to have. I know not enough of us have them, but it is something that we should strive to have. Save for retirement. Even though you're young, as we see from this year, time flies by, so it's never too early to start saving for retirement, and of course paying off debt starting with the highest interest rate. Distinguishing wants and needs are not easy. We have to be self-aware. These are usually not fun things to cut out because they're the fun things that we like to do that are things we may need to either cut out or cut back on. And they're not the things that we have to survive. So just keep that in mind when you're looking at your extras, your wants, things like that. And the final step that I wanted to go over today is your business savings account. So do you have a savings account? If you do, how much are you setting aside? Aim to save at least 10% of your profits every month, but more towards the end, have up to 6 months worth of operating expenses in your emergency fund. So like I said, a lot of us don't have emergency funds, but it's something that we should strive to do, and that's in addition to the 10% of savings. And it's very important for seasonal businesses. If you're seasonal, having that emergency fund, having the savings is going to help keep you going through those slow times in your business. Extras in revenue for passive sales months, unexpected absences. God forbid something happens and you get sick or are injured, you have a family emergency. Those are all things that we don't really plan for or expect, but if we have this plan in place, we should be a little more prepared for those things. Ask yourself these two questions in determining how much to save. 1, how much cash do you have an immediate need for every month? So look at your expenses and kind of get an average of what your expenses are each month. Look at your cash flows from previous months, your funds coming in versus your funds coming out. How is all of that fluctuating? What are you averaging per month? Consider future costs. You may want to go to a conference in the next quarter, or you want to do some different kind of advertising. That's going to be an expense that you don't typically have. So keep in mind what you kind of have in the vision for the future. And then the second question to ask is, what stage of growth is your business in? If you're just getting your first clients, of course, you're not going to be building huge amounts of savings. You're not going to be, hopefully not having too much debt, but debt probably is one of your bigger focuses when you're starting out, because you tried to get that extra funding to get everything off the ground. So just consider your stage of your business, where your business is growth-wise, and what your plans are for your business. So I hope this was helpful. Remember, it's the 50-30-20 rule. Your expenses, your debt and savings, and your wants and needs. Just breaking that down. I hope this was helpful. I hope I made it to where you guys can kind of follow the process here. And just remember, this is it's not one size fits all. So you have to kind of adjust this and make it work for your business, your personal financials, whatever it may be. If you need help or have questions, feel free to reach out to me. You can drop savings in the comments to this video, and I'd be happy to reach out. If you have any other questions, again, I'd be happy to answer them. We are wrapping up 2022 in the next couple weeks, and we'll be starting 2023. With the new year means tax season is upon us. So if you have any questions about bookkeeping services or ways that I can possibly help you prepare for the tax season, or just to start your 23 off right and start your monthly reoccurring bookkeeping, I'd be happy to discuss that more with you too. You can drop a message in the comments, personal message me. I do have a business page, Hooked Accounting Services. I'm also planning to start a group on Facebook soon, so be on the lookout for that. And I also wanted to mention another housekeeping thing is that in 2023, the lives are going to be moved from Wednesday to Mondays. So just be aware that the lives will be changing days during the week in the new year. So I hope this was helpful. If you have any questions, let me know. Also, remember, if you have any trips coming up, drop them in the comments. I'd love to hear what you guys are doing for the holidays. And I hope you have a great week as you finish up your shopping and you bring your year to a close. I hope everybody's having a great fourth quarter. I will see you guys next week. Have a great day.